Good morning and welcome to your market briefing for August 17th, 2025. We're observing a clear shift in market dynamics today as the major US indices are pulling back from recent highs. This move is driven by widespread profit-taking, indicating that investors are becoming more cautious after a period of strong gains. This sentiment is underscored by a noticeable spike in the VIX, or the Fear Index, suggesting an increase in demand for downside protection. In this environment of consolidation, our focus turns to Palantir Technologies, ticker PLTR. The stock is participating in the broader market pullback, showing signs of short-term technical weakness. However, this price action is interestingly contrasted by very positive fundamental news regarding a significant partnership expansion. Today, we'll analyze the market's health and then dive into Palantir's technical setup and strategic business wins. Looking at the S&P 500, we see a textbook example of market consolidation. After a strong run-up, the index is now pulling back, characterized by several red candles. This price action suggests investors are taking profits off the table. Crucially, the index is now approaching its middle Bollinger Band, which represents the 20-day moving average and a critical area of short-term support. The RSI, a momentum indicator, has also turned down from overbought levels, confirming that the recent buying frenzy is cooling. The key question now is whether this is a healthy pause before the next leg up, or the start of a more significant correction. Turning to the Dow Jones Industrial Average, the blue-chip index is holding up slightly better but is not immune to the cautious sentiment. The chart shows the Dow trading in a tight range near its recent highs, a classic sign of consolidation. While the index has shown resilience, key oscillators like the stochastic are in overbought territory, suggesting the market is extended and vulnerable to a pullback. This indicates that even the largest, most stable companies are feeling the pressure as the market digests its recent gains and assesses the path forward. The Nasdaq Composite, which has been the leader of the recent rally, is now leading the pullback. The chart clearly shows the tech-heavy index retreating from its peak as momentum fades. We can see this confirmed in the MACD indicator, where the histogram is shrinking and the lines are converging for a potential bearish cross. The RSI has also turned decisively downwards. This doesn't necessarily spell the end of the uptrend, but it strongly suggests that the period of easy gains in the tech sector is over for now, and a phase of consolidation is underway. The story of investor caution is told most clearly by the VIX chart. The CBOE Volatility Index, often called the market's fear gauge, has jumped sharply from its recent lows. This spike indicates that institutional investors and traders are actively buying portfolio insurance, such as put options, to protect against further downside. This is a classic risk-off signal. A VIX that remains elevated at these levels would suggest that the current market choppiness and downward pressure are likely to persist in the near term.
Now, let's focus on Palantir. The stock chart shows it's currently in a correction phase after a powerful rally that pushed it above the upper Bollinger Band. The price has fallen back to 177.17, heading towards its first key support level, the 20-day moving average, which is the middle Bollinger Band at around 167.47. This pullback is technically justified, as our indicators are signaling a loss of momentum. The RSI has sharply turned down from overbought territory above 70. More importantly, the MACD indicator is on the verge of a bearish crossover, where the MACD line crosses below the signal line. This is a classic sell signal for technical traders. The key level to watch is that 167 support. A hold there could set the stage for the next move up, but a break below could lead to further downside. While the technicals suggest short-term caution, the fundamental picture for Palantir continues to strengthen. A new Benzinga report highlights that Palantir is extending its multi-year collaboration with Sompo Japan, one of Japan's largest insurance companies. This is not a new contract, but an expansion, which serves as a powerful testament to the value Palantir's Foundry platform delivers. The goal is concrete: to drive over 10 million in annual efficiency gains for Sompo. This news is significant for two reasons. First, it demonstrates Palantir's ability to retain and expand relationships with major commercial clients. Second, it reinforces the company's growing footprint in the lucrative Japanese market. So how do we reconcile the bearish chart with this bullish news? Our outlook is cautiously bullish. The current stock pullback, driven by broader market sentiment, could present a strategic buying opportunity for long-term investors who are focused on the company's execution and growing commercial revenue stream. The key is whether the strong fundamentals can ultimately override the short-term market turbulence. Thank you so much for joining me today. I look forward to sharing more market insights with you in our next analysis.